This is Foliko Live. Travis has some meetings this week, so it's going to be just me today going over stocks to watch and a couple, I guess, pre-market prep things that I just like to think about, and some trades I potentially am looking to put on in the next couple days, or at least I'm watching. So we've had a nice bounce in the last 2 days, but unfortunately, Foliko data is still pretty bearish. If I can just show you a screen share here. So this is Foliko output for an assortment of names. Basically, what I did on the platform is I looked for basically interesting price targets. So big upside, big downside. In this case, a lot more downside than upside, man. Especially in some of these names that are coming into earnings. Twitter and Google being two of them, technically have some pretty good location for a short. The options are obviously very expensive over earnings, so that's not something I necessarily look to trade via options unless it was, right before the event. But still very bearish, and this is something Travis and I had spoken about a couple of videos ago. We really don't see FANG bottoming until October at least, and we do have some pretty good downside for Google, but again, only 20% over 12 weeks. You have to be kind of tactical trading that because the options do imply such a decent move. But what I will show you, if I can share another screen with you. Look at some of these over here. So this is probably my favorite short of anything that I've gone through, at least on a 12-week basis. We did pitch our shorts for July. We still like those, but in addition, we think this CAJ is canon. It's an ADR. We're about 16 days before earnings here, and as you can see, earnings power has completely fallen off a cliff. So I'm actually looking at the December calls at the money. For 50, I believe they're 50 cents. I'm sorry, I have my notes over here. Sorry, it's the December 16th 20 strike puts are 50 cents, which you can see. I hate to go back and forth, but I mean, that would be, if we reach our target, that's, pretty significant upside. That's those calls go out at $5 terminal. If we reach our target from 50 cents. So that would be a pretty nice trade. That's probably, in terms of the data I looked at on Foliko, in the last couple of days, that is, I think Foliko's best idea over that period. That being said, though, sorry, my mouse is just running all over the place. That being said, I will show you a few longs here, just because I know we get on here and we just talk about bearishness, which I mean is what our data bears. Unfortunately, if you're long only, there's only so many things in here that we think you should be buying, because like we said, we still don't see much market stability yet. So I will show you over here. So there's a few different options I've prepared here. So we have two just by the biggest upside, and these are tough companies to buy. I mean, Cody has been, just a terrible performer, the makeup company. But we actually have 33% of upside over 12 weeks. So that's actually an interesting long. That might fit the thesis of market's really washed out. We're just out of sellers in certain names, especially ones that have just gotten beaten over and over. The other option is, if you wanted to buy this dip in energy, and we don't want to do it yet, we probably want to wait 2 or 3 weeks. We came out with a video 2 weeks ago. We wanted to short oil over a 4 week period, We're probably 2 weeks into that. So we will look to buy the dip wholesale soon. But if you wanted to buy one now because you thought the recent move was overdone, it would be Neighbors, which has a large U.S. drilling operation. So that might fit the thesis of more domestic production, things like that. We do have some pretty good upside over 12 weeks, about 25%. So the other things that I'm just kind of thinking about, personally, because I think it's important to bring your own experience and bring your own, framework to Foliko, is I'm looking at names that, in a bear market, I think there's, pretty much three parts. First, we take down, all the high flyers, the ARC names, check. We've been beating those up for, the better part of 15 months. Step two, you kind of shoot the more stable, growthier names. So your FANGs, your NVIDIAs, your things like that. Okay, so we did that. And the last leg is to really kind of take out, it's the baby with the bathwater trade. So your defensives, your utilities, names that have just generally held up better during the move. The third leg of a sell-off or bear market, or however you want to talk about the sequencing, is generally some of that stuff. So one of the stocks I've been looking at, because I've just been waiting for the short opportunity, is this ABBV, which I will show you. Sorry, they only let me share one screen at a time over here. So AbbVie is a biotech name. It's had an incredible run up. Was terribly underpriced. Great dividend. So basically, all those things have mean reverted. But now we're in a situation where this stock has become pretty dislocated in terms of relative strength against just about everything. And these are the trickiest trades to pick, right? Because there's a reason that they trended so strong, and they overshoot. People try to get short too early and things like that, and it obviously fuels the fire and makes it worse. So that's obviously one of the things you have to be thinking about when you are trying to catch the turn, because the turn is going to be way higher than you expect. So if I come over here, we actually, for the first time, are starting to see not big downside forecasts yet, but downside, and that's a new feature for our AbbVie forecast. We've been pretty much flat to smalls higher, and now we're actually looking for lower prices here. So that's another interesting one that I'm watching, because I think we're in the third leg of the bear market, where the risk reward on the short side is starting to fade away in certain names. I mean, some of these names are down 90%, and they could go down 90% again, sure, but those are not areas of focus for me. I'd much rather, and that's why we've been out in front of you guys with things like short XLV healthcare, because that's held up very well. Other things like that, short some consumer staples, but generally that's kind of how I'm thinking about it here, is what hasn't moved lower yet that needs to, as opposed to what's already 75% lower that we can chase. And by the way, we do have and I'll get back to some of my targets here, but we do have this freaking mouse. So we do have some pretty good downside on some of these growthier names. So it's not like we totally think that we're out of the woods. I'm just talking about in terms of a risk reward standpoint, shorting AbbVie, as it comes off the highs and makes a false high and turns, is generally, a better risk reward, trade than, do we still want to be chasing snaps so far in the hole? Foliko data says yes, and I probably will, but you just want to be careful and thoughtful about how dislocated something is, and what stage of the move it's in. Is it consolidating? Is it repricing? because it's important, especially on the short side. You're kind of like a counterpuncher. You have to be a bit more exact than, being on the long side, which is a positive carry trade. You really don't have to exit the position. If you can stop out because of your risk management, of course, but you don't necessarily have to. You don't have to bail because the borrow cost gets prohibitive, or your puts go to zero, or whatever it is. So you have a bit more leniency, which is why you'd be very careful on the short side. But that being said, you know, 12 more weeks of winter for Coinbase, Snap, uh, Twitter. I think if Twitter didn't have earnings come up, I think that would be a great spot for a short. Right here. It's, technically a very good spot. And, there's just a lot going on there, and a lot of catalysts for things to go wrong, which, if you want to trade options on stuff like I like to do, having a catalyst is very, very helpful. In addition, we discussed this about a week ago on our stocks to watch, but we don't think this sell-off in European banks is over either. So, I talked about the third leg of the sell-off targeting ABV, but that doesn't necessarily mean that there's stability in kind of the first two legs. We still think that this is a pretty soggy market, and you have to have a very good reason for longs in general. So, the three at the bottom with the green upside are probably three of the model's top ideas. And depending on what kind of trader / investor you are, there's different trades there. I would buy and hold Cody as opposed to, I'd buy Neighbors for a trade, and I think it's just super important to remember the difference between, are you long for a trade or is it an investment beforehand? All too often trades turn into investments, and that's, those are the worst performers in your portfolio because you have no idea what to do with them. So a couple other things that I'm kind of thinking about. We're about 2 or 3 weeks away from earnings. In general, we're going to have the banks lead off a bit earlier here. So what I have actually been looking for is some indication from the banks to see, our bank data to see what it would say about interest rates. And given the large move higher in bond prices lately, I thought it would be interesting to see if this is, potentially a short opportunity in banks. If I could bring you over here. And the answer is kind of, but not really. So this is earnings power for Citigroup. It's turning much lower, but the stock price is already pretty depressed. So this isn't something that I would look to trade going into earnings here. But it is something I'm thinking about as we approach it. I can show you, there are a couple kind of scary indicators, unfortunately, for these upcoming earnings. If I could bring you to look at this collapse in earnings power for Google. This is something I'm definitely going to be monitoring, because these are the best trades in my opinion. This happened with Netflix last quarter. Earnings power just completely falls off a cliff before the event, and you get really an outsized move down. So this is something I definitely will be monitoring. It's something we'll talk about the week of earnings. It's not actually all bad news though, because whatever Google lost in earnings power, Apple's found recently, and it is starting to turn over. But that's a pretty nice move higher in earnings power since June. So this is actually one that I would consider on the long side, for like an earnings squeeze kind of trade. Again, this is coming up in a couple weeks, so we can't enter these. I wouldn't enter these now because of the time decay, and that's not the bet I want to make. The bet I want to make is on earnings, not on price into earnings and the lead up. So I think it's obviously important to express your view correctly. But that if I had to pick one to be long into earnings, I think it would probably be Apple. Long Apple, short Google looks like it works. Long Apple, short. Check this out on Twitter. That's pretty gross, right? So that's interesting. I mean, that's completely falling off a cliff. So we have Google and Twitter completely falling off a cliff, and Apple picking up what they lost. I don't mean that literally, of course, but in terms of pictures and the juxtaposition of the two, it couldn't be more different. And that's why I said in terms of an all-inclusive picture, a Twitter short here really makes sense. The earnings power is falling off a cliff. The only thing that's tricky, obviously, is just buying options with enhanced enhanced premium around earnings, because the implied moves are bigger than a usual week. So you have to time those very, very specifically. But I think that's very like that's just not a good sign. Especially for a company that's had as much trouble as this one has. To completely fully reverse out all of the Elon goodwill, this quickly is pretty impressive. And the other thing I wanted to point out, so when you go here on Foliko on the main page, the thing I like to look at is this market outlook, because it just kind of paints a broad a possible picture of what is Foliko data saying about the market in general. If you step away from your single name bias and just kind of think about how healthy is this market. I got bad news. Earnings power is finally rolling lower. So maybe, and this is something we've talked about, maybe this will be the final, cathartic puke lower. We'll finally have some ugly earnings that, I'm making it up. They're down 10% after hours, but the next day they're plus 5%, and that kind of marks an intermediate bottom. I'm just spitballing here, but that kind of thing, I think would be potentially, in agreement with Foliko data. That's for sure. In addition to earnings power, though, systemics rolling back over as well. And this is something I'm worried about. Crashes don't happen, from kind of a neutral position. Crashes happen, when markets get oversold and, there's just not enough demand to pick it up and it goes straight down. And by the way, crashes don't have to be minus 50% of anything crazy. They can just be, a series of 5 days of 3% drawdowns. I mean, in 2018 we got a whole bear market in a month. More specifically, we got a whole bear market in like 15 days. So I'm not, when I say crash, I don't mean the S&P to 1800. I just mean downward driving markets. And that's my concern. I think there's a lot of people who are just expecting some kind of relief bounce, and that's really not what our data is bearing out. At least not yet. So, it's tricky because, we don't want to be the firm that's, just Uber bears. That's bad for business, right? We want to put on for ourselves and show people how to put on, trades that have positive risk reward. That's really all we're trying to do here. But I definitely worry about earnings power rolling over, while systematics rolling over, especially this close to earnings. It's not like we're looking at earnings, 90 days in the future and we have far less uncertainty. We're 10, 12, 14 days and, in some cases from these. And, I don't think that's a very good sign. So in terms of what I'll be looking to do today, I'm looking very hard at those Canon puts. I think that's probably, in terms of a medium-term trade, that's probably the best idea I gave you today. There's also a short opportunity in I got to change screens again. We also think there's a short opportunity over here in UMC. But that one's tricky. The option strike is, you'd have to buy the 750 put, which is way in the money, and basically use it as like a synthetic short. So in that case, I'd probably rather short shares. Those are two of my favorites. I'll be watching Google and Twitter like a hawk. I really think, there's some downside there. It's just more tricky to get into that trade, like I said, around earnings. And, we'll take a look at buying neighbors for a trade. I think is probably, my best idea on the long side, at least near term. Because otherwise, like I said, with our market outlook factors rolling over, I really don't feel good about adding to positions here on the long side. Taking more risk, things like that. That hasn't been a profitable strategy when our data looks like this, and I think that's very important. Is no matter how much you want to be long or put on a certain trade, I think having a programmatic, systematic approach really helps keep you away from doing the same trade 10 times and it not working 10 times because the regime's changed. And I think that's kind of the deal here. Is in general the market is lower before higher. I guess if the Fed pivots, that could change, but I don't think they're ready to do it at least in short order. So that just kind of leaves us with more downside. So, if you're looking for ideas, I definitely would be here. But I do think, there is some value, and Foliko thinks there's a ton of value in those three specifically on the long side. So if you're, long only, long bias, or looking to buy the dip in energy, that's probably more for you. I'm just going to check for any questions. If no one's got any questions, I will let you guys go, and I will, head to the rest of my pre-market prep here. All right, no questions. Well, we'll be back at you next Monday with the first round of our earnings previews and roundup. I think we do, a really, really good job with that. I think our data is pretty excellent. And I'm very much looking forward to going through a whole earnings cycle with you guys and talking about, each name beforehand, and seeing, how that does, because I think what we have, and, especially as it pertains to earnings, is very powerful. All right. Have a good one. We'll see you next Monday.